Welcome, all of you, to the IIT Madras Fireside Chats hosted by IIT Madras Alumni Association. I'm the host, Rajiv Srinivasan, class of 1978, currently an adjunct faculty at IIM Bangalore. And I'm delighted to have with us today Mr. Atul Shinghal, who is class of 1991, BTech in Naval Architecture. So let me just give you a quick read on his current occupation and preoccupation, if I may. So Atul is the founder CEO of Scriptbox, one of India's premier wealth management firms, whose vision it is to offer common investors better ways of wealth creation. He spent 15 years in building businesses in South Africa, UK, and India, and he brings expertise and experience in taking companies on their journey to 10x plus growth and beyond. He has held leadership positions at Coates Viella, Standard Chartered, Old Mutual, and Capital One in his corporate life. After two stints in building new businesses as an entrepreneur, he started his own entrepreneurship journey with Probe Information Services, now the leading provider on corporate information in India. At Scriptbox, Atul is in charge of growth, and his mission is to help a million families achieve financial freedom by making Scriptbox their preferred partner in investing. He's passionate about entrepreneurship, and apart from founding and scaling two successful startups, Scriptbox and Probe, both well funded by leading VCs in the world, he's actively mentoring a number of startups, including being involved with the N.S. Raghavan Center for Entrepreneurship Learning at IIM Bangalore. Also a regular speaker at fintech and entrepreneurship forums. Atul is an alumnus of Mayo College, IIT Madras, and IIM Bangalore. He graduated from IIT Madras, as I mentioned, in 1991 with a BTech in Naval Architecture. So it's a great delight to have you on board, Atul. So welcome, and I'm sure the listeners will benefit greatly from your insights. So the way we're going to run this is as follows. After I finish, I'm going to ask Atul to give his opening statement of 5 minutes. And after that, I'm going to ask him a few questions that have come up from his statement. And so that'll go for probably about 40 minutes. And at the end of that, we will open it up to questions from the audience. And the way we'd like to do this is if you look at the bottom of the screen, there is a chat box. If you can enter your questions into the chat box, I will start picking them up and asking them at the end of the presentation by Atul, and we'll ask him to speak to them. So without further ado, Atul, shall we start with your 5 minute opening statement? And once again, welcome.
Well, thanks, Rajiv, and thanks for the few people dialed in. Just as a precursor, I'm no economist. So though Rajiv did talking about the economy, I can give you a common man's perspective or from a personal finance and investment perspective as to how to make sense of what's happening all around us. So you probably will not get deep insights into the economy as such, but more about the implications of all that's happening around us. And before we get into the specifics around some of the things which are possibly topical around the budget and the trade deals and the de-dollarization, I think you have to keep in mind that we live in a genuinely chaotic world at this point in time, right? With the world order changing, wars all around us, trade uncertainty, both in tariffs, in terms of trade agreements, the stability around them, India's own inflation, the recent ops in Dur, and last but not the least, the whole impact of AI, right? And AI has sort of two levels of impact, one on specific industries and how they matter. The other is around the implications to jobs, the kind of jobs, the skills, and in our own personal lives, right? So while all this is happening around us, it's important to sort of note that as an investment manager or somebody who manages wealth for people, what we do see is that all around us, the markets are smart, right? The capital markets, they've been stable. India does take a long-term view of most things. And I think if you combine the fact that, in spite of the foreign institutional investors pulling out money, the domestic institutional investors, the domestic investors continue to be long India. And the India consumption story, the Indian entrepreneur continues to drive growth. Right. So, yeah, that's sort of the framing of how I think about the world. That while there's a lot of externalities and there's a lot of things happening all around us, which impact our thinking, our decision making, our view of the world, there is also an overlying sort of overarching India growth story. There is the whole domestic consumption, the emergence of the what I would call the professional Indian entrepreneur. Historically, Indian entrepreneurs were family businesses and trading, but the number of entrepreneurs who are sort of professionally educated and then have chosen a career or chosen to become entrepreneurs actually bodes very well for India. And though there is a lot of excitement and hype around sort of the startup ecosystem in India over the last 10 years, is remember it's only 10 years, right? The formal venture capital industry only emerged in India about 2015, 2016. So we're just seeing the beginnings of what India could achieve over the next 20, 30 years. So in closing, I'll say that yeah, we genuinely believe that Viksit Bharat is the right way to think about India, and India continues to be an exciting and important investment destination looking ahead.
Thank you, Atul. That's a very positive take. And when you talk about long India, it's something that excites me as well as I'm sure a lot of young entrepreneurs and young investors, because we've seen, as you mentioned, even though the FIIs have been pulling out quite a bit, the domestic investor has definitely stepped in and has supported the market. But let me just turn to the budget for a minute. The budget has been criticized in some quarters for not giving away new things. But I guess the obverse of that is that it's thinking about the long term, as the economic survey suggested. What is your opinion on the budget as a whole? And what are the sectors which you think are likely to do reasonably well going forward?
So one thing I'm very glad to note is that the budget is increasingly becoming a non-event, right? Because historically it was like a mela. Everybody waited for it with bated breath, and all these pundits used to come on to television and give what they would expect and what the outcomes were.
Right.
But I think the government has done a good job of holding policy steady. And like I said, long India, if I think they've taken a very strong view that investing in India is critical. So they focus on capex, they focus on encouraging private enterprise to invest more. The PLI is the right way to go. And I think that given that inflation is reasonably controlled, so it's not necessary that every time that the finance minister stands up, they have to give tax breaks to the common man. So what has been criticized is that the middle class did not get any relief. But overall, if you look at the buoyancy around the GST collections, if you look at how the government has thought about the long investment in capital intensive places, which will build capability for India, whether it is defense, whether it is chips, whether it is automobiles, whether it is infrastructure. So the focus on long term asset creation and capability creation, I think, is a very, very positive outcome. The focus on fiscal prudence around a very specific fiscal deficit target at 4.3 and going towards 4, a target towards debt to GDP ratio being controlled. And I think the way to control debt to GDP is not only by reducing debt, but also increasing GDP, right? So the important part is that the government has taken a stand to build, I mean, from my view, what I would call long-term compounding, right? So they're creating assets which will compound over time rather than spending now for relief or subsidies. So yeah, I see it as a very positive budget overall,
Right.
and it maintains a positive momentum for asset creation for the country.
One of the questions that people have brought up is, when you're cleaning up on the fiscal side, wouldn't that potentially mean reduction in capex? And if that is the outlook, wouldn't that potentially affect the 7% plus growth that the country needs on an ongoing basis to sustain itself and to provide jobs for the millions of people who are coming into the economy every year?
Uh, yes and no, Rajiv. So yes, there is some short-term pressure, but if the private enterprise, so I think the government is expecting with a higher offtake on capex or spending by the right structural inputs on PLI, the right structural inputs on building roads, building ports. I think the focus, and you combine that with the trade deals. I think it's a positive direction for the government, and I think the way to sustain a 7% growth rate is to spend more on capex while reducing revenue expenditure. So I think that combination is the right combination. Time will tell. I think it's important that the nominal growth rate for India continues to be in the 9 to 10%, or north of that for this sustainable growth. But I think the important part for us as entrepreneurs is to see how we can participate, not as consumers, but as creators in that future of India.
Yeah, that's a very important point because we, on the one hand, we do have a large consumption mechanism, right? Because we've got billion plus consumers out there, and our market as a whole is attractive to not only Indian but also foreign firms, and as you see from the trade deals for other countries as well. But the question that sort of has been hanging over us is there enough R&D here? Is the private sector, in fact, doing enough? Um, you know, I have had the feeling, and I don't know if you agree with me, that a lot of the R&D spending, such as it is in India, is coming from the DRDO, ISRO, etc., government labs, and that the private sector has been reluctant to invest, even in AI, which seems to be the hot topic these days. The private sector has been relatively slow in R&D and in creating capability. As you said, capabilities are important not only for today but long term as well. What is your expectation for that? Are we going to see, based on things like the PLI? PLI, if I'm not mistaken, is doing fairly well for manufacturing, certainly in electronics. But can this become sort of one of those positive feedback loops that can, create a fully emergent economy over the next few years, leading to Big Sick Bharat in 2047? What is your opinion on that?
Also, absolutely, you have to accept that historically, India, especially private sector, has underinvested in R&D. I think that's a combination of the long-term thinking and the uncertainty around policy and uncertainty around a long-term real-time buyer. But I was recently at a book launch of Deshbandhu Gupta, and the panel had Dilip Sangvi and Mr. Hamid from Cipla, and you could clearly see a commitment that from being a supplier of drugs or a manufacturer, they were investing now in R&D. So now they're seeing that there is a stronger forward-looking outlook for the country by the government, by the entrepreneurs, and I think that will lead to higher investment in R&D. I mean, I speak from a position of privilege. I'm actually dialing in from my brother's house, who's the deputy chief of the Indian Army, and he heads up what they call information security. So all technology and cyber and AI is sort of under his purview. And you can clearly see the huge push towards public-private partnership, right? The openness of the government, the openness of the army or the defense forces
Mm-hmm.
to partner is clearly there. And that what that does is that encourages entrepreneurs or companies to invest for long term, right? Because they believe there's going to be a stable buyer. They believe there's going to be somebody at the end of that cycle who will make the most of it. And I think as India's capital markets mature, and I mean, something like a Cipla has a 4 lakh crore market cap. So the
Yeah.
appetite to invest is so much more. The other day, I was at the AI summit, and the panel was Salil Parekh and from Infosys, and there was TCS, and there was HCL Tech, and Arundhati Bhattacharya from Salesforce. And the entire commitment they were making, at least in the public, was that they would invest very heavily in skills development and R&D in the
Hmm.
AI space. So they were not fearful
Right.
about job losses at all. They were actually very positive in terms of how they could ride the wave and actually lead it in many matters. And if I'm not mistaken, Mr. Ambani committed a large amount of money to the future of AI in India.
100
Now,
billion.
yeah, so I think number keeps changing. Somebody's saying 10 lakh crore, 100 billion. I think this is and his ability to say and do is very high,
Hmm.
right? If I credit India's economy over the last few years, you have to give Geo a lot of credit for that, right?
Yes.
He's
Yes.
executed at scale. He's brought down data prices to the bare minimum. So I think
Nothing.
that positive momentum he's been able to create for the country. I believe the same way. So I think now that we just had the semiconductor fab being opened somewhere in
Hmm.
UP. They've committed to 10 such places. So yeah, I feel that the time has come and the time is now that people are ready to put dollars and rupees and into R&D, apart from obviously creating capacity. So I think that's the view. At least if you listen to the various analyst calls, the companies are increasingly putting money. Is it enough? Not yet. I think it will take one more cycle, but I think the direction is positive.
The momentum is there, and as
Yeah.
you said, the direction is positive. And I think finally we're beginning to become a manufacturing economy at some scale, right? Because earlier it was only here and there, but now with electronics leading the way, semiconductors, as you said, and several other sectors, especially, I'm quite pleased about the government opening up defense and space, right? And do you see a lot of fallout from that onto second tiers uh, companies and tier three cities and so on, where you have a lot more happening? Like, for example, just to take one specific example, there is the new launch pad that ISRO has built at Kulasekharapatnam in the deep south, very close to Kanyakumari. And that's primarily focusing on private sector, Skyroot and people like that. They are the ones who are participating there. So, you really do you really see this as a positive sign that the government is now willing to bring the private sector on board, and hopefully that'll lead to more and more R&D being done by them.
Yeah, so absolutely, Rajiv. So I think if you combine what I talked about, professional entrepreneurs rather than only sort of corporate entrepreneurs,
Right.
small startups with lots of energy, deep PhDs, deep domain expertise are building. So there's a second order, third order effect happening, right, to the economy. Like now, this launch pad requires infrastructure to be built, requires utilities to be built, you require, I mean, to the third order effect of domestic help, right? So you're actually creating momentum in the economy
Right.
by spreading it wider, right? So I clearly see this move towards nuclear, space,
Right.
defense, encouragement of private sector participation, both from
Hmm.
a capital and intellect perspective. I think that we should not underestimate that the private sector does not bring only capital, which is very important. It also brings capability and intellect and research of a different order of magnitude. Right. So I think clearly the momentum is there. And my view is that over the next 20 years, we'll see a lot of positive outcomes for this country.
Right. And to take that particular area forward, this intellectual property issue, I believe that the government has supported the IPR infrastructure, the central government's control general of patents and so on. So they are now capable of issuing something like 100,000 patents a year. They have the capability, but they're now getting 100,000 patent applications a year. But you would have noticed how that was part of China's role or China's rise, right? They invented a lot more IPR, and that enabled them to license it and generate know-how. So I think on that theme of private sector involvement in both R&D and manufacturing. So from what you just said, Atul, I get the feeling that you're reasonably happy about the fact that it's spread quite a bit, right? into the private sector.
Absolutely. So I do not speak from authority on the culture of patents in India yet. I think it is still seen as an academic thing rather than as a IP from a business strategy perspective. And maybe that's because of the judicial system, maybe because of the fear that anyway it doesn't matter. But I think that will change. You can clearly see that as you build out, especially in areas of deep tech, and I live in Bangalore, as you do, Rajiv, and the number of venture capital funds you're now talking to who are committing large amounts of long only money to deep tech is absolutely encouraging and fascinating, right? So you come across some of these VC funds and PE funds who are saying, yeah, we are happy to wait it out for 10 years for the R&D to play out. We understand this takes time. We understand this is deep tech. Hopefully, AI can accelerate some of that path. But I mean, if you go back and think about it, Rajiv, what made America what it is, or what it was, depending how you see it, is the
Right.
investment in Bell Labs, the
Yeah.
investment in. If you just go to that place, and I mean, it's for an engineer, it's like going to a candy store if you walk around Bell Labs, right? It's like just so
Yeah.
fascinating. And India lacks that, right? And I'm hoping that over the next 10, 15, 20 years, in healthcare, in medicine, in pharma, in chip design, in AI, we'll
Right.
start seeing some of that stuff happening because the engineers are all Indian there, right? So we
Right.
have the knowledge capital. We've just not had the money capital to back it, and that's coming now.
Right. Or the sort of bureaucratic support, the
Yeah,
governance support and so on. But so what you're talking about is patient capital, right? That's
yeah,
beginning to happen in India a little bit. And by
yeah.
the way, when you talk about Bell Labs, and as a former Bell Labs employee myself, it was a great place, but unfortunately, it's deteriorated, as is the case with many other things in America, which is, I feel bad about it, but it's actually an opportunity for India
Yeah.
because some of those guys who were doing great work there, Bell Labs was full of Indians when I was there in the 80s. And a number of those guys and gals would probably be willing to come back here. In some sense, I want to digress a little bit. All this noise about H1B is probably very beneficial to India. It's sort of like Trump has given India one of those thousand talents programs that the Chinese spend so much money on. Trump is giving it to India for free. And so once the environment here is a little bit more conducive to deep tech research, I think we should have a number of new people coming in and joining the fray here and being entrepreneurial as well. Have you seen this? I have the general feeling that young people these days are much more willing to take risks and do entrepreneurial things because they've seen the impact of that on themselves, on their own families, and so on. And there are a number of people who are icons, right? Everybody from say Nandan Nilekani onwards. A lot of people who are viewed as Gen Z icons. So you see that? Do you see that entrepreneurship is really taking off, or is it sort of people just playing around with it? What is your view? Now, by the way, I don't live in Bangalore, so I only come there periodically. I live in Trivandrum, one
Okay.
of the tier two cities. But yeah, do you see a lot of entrepreneurship taking off in Bangalore, Hyderabad, Pune, etc.?
So you'll get the normal bell curve, right,
Yeah,
Rajiv? You'll
yeah,
get people who are excited about the glamour of being a startup and getting funded. But I mean, the number of I was at IIT Bombay speaking to a bunch of a class of 300 students, and I was there, not a planned visit, and I was there with some personal work, and one of the professors who's also IIT Bombay, she's my batch. I am Bangalore. So she said, "Atul, you come and take a lecture for some young students." Totally
hmm,
30, 40 people will show up.
hmm.
300 students were in that auditorium and
Wow.
absolutely wrapped for, I mean,
Hmm.
I ran out of time. I spoke for an hour
Okay,
about entrepreneurship,
okay,
right?
right.
And it was fascinating. And after that, I was like a rock star, movie star, standing outside, everybody talking to me, asking me
Right,
questions. So I think
right,
just the AI summit. I mean, I was there and
right.
I was watching some stuff, and the youth there was
Yeah,
just absolute. It was not old fogies
yeah.
coming to sell products to each other
War
and
stories.
wearing suits.
Yeah, yeah.
It was yeah. I'm energized. I mean, you can see that from my body language and and how I speak. But
Right,
it's not that everything is swimmingly well and there is
right.
no problem. But there is more positive than negative overall.
Yeah, and your alma mater, NSR Cell at IMB, is also a sterling
Yeah.
example. So is IIT Madras's research park, right? The number of
Yeah.
startups that are coming out of there, unicorns, etc. So I think on a positive note there, I agree with you on the long India part. I think things are kind of finally coming together. This is sort of one of those perfect storms, right? Money, bureaucracy, government, right? R&D, all this is coming to. So that's a very positive feeling. There's a certain energy in the air. But if I may, can I just switch topics to the FTAs? The Indo-Europe Free Trade Agreement and the India-America bilateral trade agreement, which of course is slightly in limbo, or not limbo, at least it's confused because of the Supreme Court in the US striking down tariffs, etc. But with the Indo-European FTA, let's start off with that. Is there going to be a big risk of large numbers of European imports just showing up here? And, as it is, people have been talking about fancy cars and alcohol and so on. And at the same time, they may impose all kinds of non-tariff barriers on Indian products. Like I remember the most entertaining non-tariff barrier that I've heard from Europe was a few years ago in the 1980s. They prevented the influx of Japanese VCRs by forcing every VCR to go through a tiny customs outlet in Poitiers, which is in the middle of the country. It's not a port, right? So they slowed it to a trickle, but that's the kind of thing they do. And the CBAM and the other carbon-related uh, non-tariff barriers. Given all this, what is your expectation? Do you see that as a big opportunity for India, or is it just something that was sort of a shotgun wedding because the Europeans are getting pissed off with the Americans and so with the Indians, so they decided to come together? What is your feeling about the Indo-UA European FTA?
So Rajiv, it's difficult to make any sense of what's going on in the world, right? Because the rules of the game are changing every day. Nobody
Yeah,
knows who's friend. And like the Canadian Prime Minister said, if you're not at the table, you're on the menu. So I
right.
think India is doing a great job of being on the table, right? They're not on the menu any longer. They're on the table at every table, right? Whether
Hmm.
it's the UAE, is whether the European Union, whether it's with Brazil, whether it is with America to the extent possible.
Right.
But I think the fact that we're on the table is credible, right? Earlier, we were sort of a pushover in most things, and I think that fact that we have the stature and the capability in the markets to do it is important.
Hmm.
Coming to the European part of it, I think my personal biased view is that Europe itself is in decline overall. And they are too stuck up in sort of their own challenges from a funding their sort of social welfare. If you look at
Hmm.
Italy or a Spain or a Germany or any of these Scandinavian. So I think while there is merit in the EU trade deal, and it's a balanced deal. I think two things from what you said. One, imports force you to improve the quality of your manufacturing
Hmm.
because it
Hmm.
sets a certain standard of German engineering, and you need
Right.
to learn from that, and you need to take that as an opportunity.
Right.
And I think, given that India does insist very often about local contribution to any global manufacturing, like the Rafale deal, so what it does is it lifts the quality. The same, going back to your R&D question,
Right.
into manufacturing in a real manner. I think also the some of these sort of non-tariff barriers or the non-tariff non-monetary challenges are also in a way about transparency, about better governance, about. So I see that while there is short-term pain, there is long-term gain in both of those. And I feel that given our pricing power, given our sort of manufacturing base we're now building,
Hmm.
we'll gain more from this transaction. And Indians are good negotiators, so I think we'll come out smiling over a 5, 10, 20-year period. And I mean, if somebody wants to play games, I think this government does have the backbone to fight it out, right?
Hmm.
They will not take it lying down. I mean, see, irrationality you cannot beat. If somebody is being irrational, somebody is
Right.
being sort of childish and petulant. I mean, that is hopefully a passing phase. It'll go away 3 years or so, but till then we'll see what we can do.
No, I agree with you on the quality part. I used to work for Siemens when I was living in California, And one of the things we in America were, in fact, a little bit annoyed at the Germans for was their obsession with high quality. They wanted to build computers that would last 10 years. I'm like, nobody wants computers to last for 10 years. But yeah, so it'll be a fillip to Indian quality, which is, sometimes a little bit suspicious and doubtful. So if we
Yeah.
can learn from the Germans and the Japanese, how to produce really high quality dependably, that would be a great help. I also share some of your skepticisms about Europe's long term prospects. But on the other hand, they do have a number of things that would be helpful for us. Now, but if you, one of the things that I found a little maybe distressing is that we're focusing on in both the trade deals with Europe and America, we're looking at high labor content, gems and jewelry, textiles and leather, but there's not as much on engineering goods or machinery, chemicals, etc., where we should also start becoming more export oriented than import oriented. What do you think? Is that going to happen? Are our engineering goods and technology products also going to benefit from both these trade deals rather than just labor oriented things?
I feel it's a sequencing thing, Rajiv.
Yeah,
Let's leverage what we have. We have labor, which is quality. We have English speaking, trained labor available, right? On one side, we talk about the stress on the Indian economy because of joblessness, right? But
right.
there's a lot of good labor. I think leveraging that and building and creating capital and creating profits, and then in parallel investing, which I think is happening in parallel. We talked about defense, we talked about nuclear, we talked about deep tech. We talked about AI. I think we might not be ready to export yet because we have
Hmm.
some way to go. But what we already have, let's go win. I mean, if I'm a Sachin Tendulkar, I better go win the match by my batting. I don't want to become a bowler on a batting pitch. So I'm good at batting. Let me hit the sixes now, and then once we win the game, we'll play again. By the time we'll train some bowlers. So that's how I think about it. You can't have it all. We have labor capital available. Let's leverage it. Once we have intellectual capital developed to a certain level, we'll push on that. It's in my view sequencing.
Yeah, there is also the quality of remittances. For example, we're getting a lot of remittances from the Middle East, but the quality of that, may be somewhat more dubious in the sense that those migrants who've gone to, say, Europe or the United States probably have a better quality of life. They're, they tend to also it's kind of a mixed bag because those people tend to invest in those home host countries in Europe or America, not so much in India. Whereas those who went to the Middle East, especially lower level, not so skilled labor, they tend to invest back in India. But it's a complicated situation because I living in Kerala, which is in the middle of this remittance economy, I see a lot of people who go there and come back, and it doesn't really help them in bringing up their families in the next generation or two generations further down. It's not happening. But I see people going to these advanced countries. But then there is the issue of racism, increasing racism, H-1B problems, things like that. So mobility, exporting of skilled people, I think is something. Maybe you're right. It's a sequencing thing. Over time, that'll come down. But at the moment, we do have a surplus of skilled people in India. And that also brings up this question of education. The Indian education is not at a level that it could be at, in the sense that I see poor levels of education. Maybe mother tongue education, I don't know if you talked about that or heard about that at the AI summit. Mother tongue education could potentially improve the way people learn and grasp and absorb and so on. And so I think there is something that needs to be done on that as well. But I wanted to switch topics to another issue with these trade deals, which is the agricultural part. Okay, because all of us know that this is a red line. We've got a large number of, perhaps not so highly productive people involved in agriculture, but we also have problems with genetically modified organisms. We also have problems with terminator seeds, and we also have problems with non-vegetarian milk products, things like that. So, um, are we going to find especially with Bill Gates in India at this time, talking about improving the quality of Indian cows and so on. Are we at a point where our agriculture, both our, I don't know, taboos and our livelihoods are at some level of jeopardy? What is your feeling on that?
It's difficult to tell, Rajiv, because I'll tell you the finer details on the trade deal are just not public, right? There are statements made, the statements withdrawn. I suspect that there's a lot more noise than actual signal here. Uh,
Hmm.
that said, productivity in the Indian agriculture sector has to increase by leaps and bounds, whether
Right.
that is done through an external impetus or by internal investments, because there are a large number of agri-tech sort of VC funds now who are putting money into improving the quality of farming, the digitize or the automation of production, the better sort of connectivity in the supply chains. So while there is, I feel, I mean, and I've read many opinions and many Twitter threads, some saying that what has got opened up is anyway things we don't produce like avocado and soya bean and are not the really heart of what we do, which is rice and wheat and sugarcane and what is core to us. I think we'll have to watch what happens because I'm reasonably sure, given the political sensitivity,
Hmm.
they will not let the Indian common man bear the brunt of any deal. So I think the fine print is yet to be seen, in at least from by me. So I remain sitting on the fence on this one. I feel two things have to happen in India. A lot more investment has to go into agriculture to increase outcomes, to improve quality. And also, I feel that a lot more money has to go into manufacturing, like we spoke about, so that the farm labor becomes more productive and is seen in the urbanization of India, like you talked about, the small town where the launch pad is being done. Now, where will the labor come from? They will come from the neighborhood, right?
Right.
So I think that part that we take industry to smaller towns, we create larger industry corridors, we create more infrastructure where goods can flow easily by the huge investments in highways. So highways are the modern rivers, right? If you look at all the old civilizations, they were all built around rivers, and the same thing has to happen around highways. And India is making some good strides there. And I feel that combination where less dependence on agriculture as sustenance, but more dependence on agriculture as a manufacturing. If you see agriculture as a manufacturing unit and with the same quality standards, the same productivity standards, that's the future. Which is where I believe it should come out. So whether imports harm the farming sector, which is yet to be seen,
Hmm.
I am of the opinion that we need a lot more investment in agriculture to improve outcomes, and we need a lot more investments in smaller towns to create manufacturing hubs so the farmers can start working there.
No, I agree with you. I liked your way of positioning it as agriculture as manufacturing, right? We need to reach productivity levels and quality levels and so on that are, world beating. That's absolutely true. There are some other wrinkles as well. I was thinking that the Americans are eager to sell India corn and soybeans. There's not that much demand for soy here, but corn, in a strange way, can be useful here for ethanol, right? Instead
Yeah.
of producing sugar and sugarcane and eating up our surface and underground water, might as well import ethanol from American corn. So that'll make everybody happy. And the other part that you were mentioning about small towns, clusters, right? And not only highways but also ports. Like for example, the port of Trivandrum, otherwise known as Virginium, is India's largest container transshipment port. And all of a sudden, we have the ability to transfer 75% of India's imports directly from India, not going through Colombo or Singapore or something like that. So I agree with you. The arterial part, the highways, the inland waterways, the roads, railways, all those things are a very important factor in taking these things forward. Now, one more question is regarding the oil part. With the Americans, there seems to be this obsession with forcing India to not buy oil from Russia forcing us to buy from America or from China or something like that. What is your view of that? How is the energy part going to become real, or is it going to be a problem for us, or can we survive, manage it?
Now, so India is an oil import dependent economy, and I think that's not going away soon, right? Because of how much ever we invest in solar, and I mean some of the stuff that's happening in solar is fascinating. I mean,
Right.
somebody was telling me yesterday that somewhere in Gujarat, beyond that Rajkot area, they've got 7,500 hectares of solar
Okay.
farms.
Okay.
Right. So some exciting stuff is happening, but that's, I mean, that's an aside. Now,
Right.
that said, I think oil has always been a dodgy thing for the global economy, right? And America likes to play bully. The fact that what they did in Venezuela is acceptable to the world, to me as a common man, is shocking. Now, whether they went after precious metals, whether they went after oil, whether they went after what, God knows what. So I hope India doesn't back off. I hope India does what is right for us as an economy. Russia has been a good friend, and
Yes.
obviously you can't condone what's happening in Ukraine. But I feel India will do what is right for us. I think the fact that the foreign minister said that repeatedly, that please don't lecture us, please don't push us. We'll do what is best for our people. Let's see. I think it's a balance. Is there enough oil available in the world for India to buy? Absolutely. Have oil prices held steady at about 60 to $5? Yes. And now you buy it at 58 or 62. I don't think that makes such a massive difference to India. So let's see how it pans out. I think India continuing to maintain a reasonably non-aligned stand
Hmm.
with the global economy and doing what is best for itself, I think is powerful. So whether we get the oil from Iran or from Venezuela or America or obviously the Middle East, time will tell. So I'm not a it, that's not one thing which I actually track or monitor. It doesn't give me sleepless
Hmm.
nights. I'm aware, but I think it's a bit of a storm in a teacup.
Yeah, because there has been some commentary that it's interfering with India's foreign policy per se, to say you mustn't buy from Russia and so on. But I guess you're right. Oil is oil, more or less fungible, and if our refineries can deal with it. For example, Venezuelan oil is kind of heavy, but our refineries can deal with it. So that may or may not be a major problem. But energy is something, especially now that India is investing so much in data centers, AI data centers, and so on. So I also read somewhere that India is actually doing quite well in terms of installed capacity if you compare it to China at its comparable stage of development. They're like 10, 12 years ahead of India on all metrics. So apparently the electricity generation part of it in India's case is not that bad either. So energy, well, we need more and more of it. We'll consume more, right? And it
Yeah.
needs to be available and should be more high quality energy, right? We shouldn't have brownouts and blackouts and so on and so forth. So again, part of infrastructure. So you're not so worried about the oil part is what's coming across. And I agree with you. It's a transaction, right? You buy from wherever it makes sense for you. And there might be some hiccups if the US actually attacks Iran. Okay, so there is that issue as well. But putting all this together, Atul, what should the actual investment strategy for an Indian investor be now? I mean, should they be looking at safe havens? Should you hedge against? The rupee has been depreciating over the last year or so against the dollar, in which the dollar itself has been depreciating against other currencies, right? So, do we need to look at safe havens when gold has gone through the roof? And which is interesting because, in some sense, it's made it clear that the Indian household has been very clever about long-term hedging against currency risk, right? Because India has something like 10% of all the gold that has ever been mined in the world, right? Some 35,000 tons. But what is your advice? If you can give a general kind of positioning statement to your investor audience, what should you do?
I'll sound like a broken track record, and if you hear me anywhere, it'll be asset allocation, right? You have
Okay.
to have a balanced portfolio. You have to align it to what you want to achieve. You want the money in 3 years, 5 years, 10 years, 20 years, right? And how are you investing? So we strongly
Right.
believe in asset allocation, whether it's 60% equity, sort of 20% in debt, 10% probably in commodities or international, and then 10% is obviously more speculative. Depending
Mm-hmm.
on, are you talking about 1 crore, 10 crore, 100 crores, and depending on what your net worth is and why are you investing. So it's very difficult to talk about specific investment themes. That said,
Mm-hmm.
am I long India? I absolutely am.
Mm-hmm.
Do I believe we've had some blips and it might continue for a little bit more? But if you take a 5 year view, the belief in equity is still strong. The run up in silver has been surprising. We compare silver to a small cap stock,
Mm-hmm.
very low float, high speculative participation, no DCF. So how do you value silver? Right? There are no discounted cash flows. There is no
Right.
future value. There is no profit. There is no profit earning. So, and it's sort of it's run up because of speculation. And I don't know. And this happened before. If you take a 100 year cycle or a 30 year cycle, these are even gold. If you take a 20 year cycle or a 30 year cycle, the returns are slightly below Nifty or 10-12%. Obviously, the last 1 year has been crazy.
Right.
I mean, as advisors or as wealth managers, we've always had 10% in of our portfolios in precious metals, right?
Mm-hmm.
And we continue to believe that. Now, what happens is because of this run up, sometimes the portfolios get sort of imbalanced. We will typically encourage profit taking.
Mm-hmm.
Right, you go back to your balanced portfolio, do it prudently every time.
Right.
So I'm not saying this or then is a good bad time to be in gold, but investing an extra portion of your portfolio into gold with the expectation that it will double again might not be prudent, right?
Mm-hmm.
It's like a mega cap stock. It is a store of value. It is a safe haven for whether it is de-dollarization, whether it is sort of the central banks. So having a prudent amount of it in your portfolios is understandable, but suddenly saying that I'll increase my exposure and I feel missed out, and so this
Mm-hmm.
whole FOMO factor
FOMO.
be
Mm-hmm.
a driver for any behavior.
Mm-hmm.
And I mean, it's easier for me to say than do for people. But yeah, listen to your advisor. Make sure that your portfolio is aligned to what your objectives are. Now, within that, how you balance it at some opportunistic time. Like, let's take crypto, right?
Mm-hmm.
Now, using crypto as a asset class, it does require a strong heart, uh, and because it bounces around so much, right? But
Right.
having a little portion in that as an asset class probably makes sense. Now, having crypto or a stable coin as a trading unit with a pegged dollar value is a different kettle of fish, right? There you're basically saying, I'm going to use a different set of rails to do my trading. And I think
Right.
that you would support. But trading the rails itself is something I don't understand. So I'm still a old world thinker. And obviously we use new age wealth management in terms of algorithms and math and science to figure out what to do.
Mm-hmm.
But it's all about asset allocation. It's all about long-term wealth creation. It's all about uh, just holding steady. And I think post 2020 we saw some serious euphoria. But I
Yeah.
remember people in 2020, sort of in March, April, pulling out a lot of money that the world was going to shambles,
Right.
nothing would happen. And by June, July, August, it was back, right? And these people can never come back because you just didn't know when to re enter the market,
Right.
right? So, this whole speculation that see, everything is a value at a certain price point and at a certain point in time. So the argument I have with people who panic and who sort of say, no, this is all going downhill, and I'll take out all my money. I said, where will you invest it? Right? Okay, so you've now taken out, you're sitting on cash. What will you do next? No, I'll wait for the market. So I said, will you wait for the market to go down or come up? Okay, if it goes down, then how do you know this is the bottom? And if it's going to go up, then anyway, you're out in the wrong time. Right. So this
Right.
whole short termism around investment management is
Right.
something which destroys wealth. So I'm not saying at all that you have to actively manage your portfolio. You
Mm-hmm.
have to watch what is happening. You have to rebalance what is required.
Mm-hmm.
But being heavy long only on one asset class or putting, unless you got speculative money, right? Then
Mm-hmm.
obviously then you're doing something else. But if this is to make sure you retire easily and you make your children go to college and you are 55, 60, 65 years old, whatever you are, and we are all going to live 30, 40 years more. I think
Right.
the thing to think about is that given the investments in healthcare, the advent of AI, the quality of our own lifestyles,
Mm-hmm.
we're going to live much longer. And I think having enough money at that end of that is critical. And if you also think about that, as some of these breakthroughs come through in healthcare and you need money to invest in that, I'd rather keep money aside in that than put too much money into gold.
Yeah,
Sorry, a
an
long
interest.
answer to a short question.
No, no, it's a good response from you, and it brings up this question of healthcare because, as you said, we're now beginning to see life expectancy shoot up, right? So I think the average life expectancy of Indians is somewhere close to 75 now, and I'm expecting, and I see, a lot of people living up to 90, 95, etc. And the other side of it is the healthcare costs that are shooting up too, right? Private equity has come into it, and it's no longer the case that you can depend on your insurance to really support you. So that's a major thing. Plus, of course, uh, unlike maybe in the West, a lot of us want to leave something as a legacy to our children, right? And therefore, we have different objectives. Because what I've seen in the U.S. is that the money manager tells you, okay, here is your current endowment, and you can take it out at this rate for the next 30 years, and at the end of it you have nothing, and then you die, right? So that's okay. Whereas here we have a slightly different perspective on that, and so maybe it's a little bit more risk averse. But as you said, you want to be able to take advantage of these new areas of technology that are coming up, new healthcare, new quantum computing, whatever, AI, etc., and at the same time insulate yourself from too much risk. So you're saying, what you're suggesting is, don't get too caught up in the day-to-day fluctuations of the market. Don't get too caught up in the fads. Like, to some extent, crypto has become a fad. And similarly, gold has become a fad, right? But, the steady old thing, 60-40, right? And SIPs and so on. But are you missing out by being conservative in that sense? Are there things that you should be doing? That's one. And the second question is this whole de-dollarization part, right? De-dollarization, I think, is a given, considering that America's economy is declining in relative terms, right? And so, should you be investing? See, when many Indians think about overseas investments, the only thing that comes to mind is investing in the US funds and so on, like PGIM and so on, have US funds. What about investing in Japan or, I don't know, Germany or other countries? What is your advice to your customers about how you should be diversifying yourself on an international basis?
So I'll answer the question in two parts. One is about, to your point, change, why do you invest, first of all? I mean, you have to get that question sorted out.
Correct.
The
Yeah.
primary purpose is that you can sleep easy at night. The primary purpose is that there is wealth preservation first and then growth,
Right.
right? You really don't want to be taking extraordinary risk and sort of unsecuring your future. So, from an investment perspective, and especially for people who are thinking about retirement, we call it a three-bucket strategy. First bucket is what the money you need in the next 3 to 5 years, put into very safe asset classes, which which could be which could be government denominated bonds, it could be sort of low risk assets, probably more fixed income. The next bucket you put into slightly higher risk, sort of long debt instruments, and then anything beyond 6, 7 years, because I mean, historically at least, markets have returned into higher risk and higher return sort of equity portfolios, and you keep rebalancing these buckets in a systematic manner. And that is the asset allocation I was talking about, right? You keep
Hmm.
doing this on an ongoing manner. India's mutual funds are extremely tax efficient, extremely liquid. So it gives you enough flexibility, enough sort of ways to manage your wealth for the long term. Taking 30, 40-year view
Right.
is how to think about wealth and investments in the same breath. Now, coming to de-dollarization, I don't think this is an overnight phenomena. This is a
Hmm.
trend. It'll take time to stabilize because there are rails which have been built, there are Swift ports, there are banking channels, there is a trust equation. So I think it'll take some time but it is a secular trend. So I think you will
Mhm.
see other currencies gaining strength, other currencies becoming fiat and collateral between nations for people. Now, in terms of international investment, yes, having a certain portion of your portfolio exposed to international is important. You have to judge for yourself where your expenses are, what you want to hedge. Now, I think given the opening of the gift city, and I think
Mhm.
some of these asset managers now starting to create solutions. See, you also have to know it's not about having a yen exposure in Japan. You need
Mhm.
to know what asset class to buy, right? And I don't think we have enough research in India today uh,
Mm.
to support that thesis. Right.
Mm.
If I
Mm.
have to recommend to you that okay, you go need to go invest in dollars or in yen or in Korea or whichever country you want to take an exposure on, I need to
Mhm.
have the ability to invest that money into an asset class I understand and
Mm.
monitor and track and weigh various choices.
Mhm.
Given all of that, and given that India continues to be an exciting destination, and
Right.
India, we talked about Viksit Bharat, we talked about the opening up of the Indian economy, we talked about the increasing consumer domestic demand. I would suggest that keeping a reasonable portion of your wealth in India makes sense
Mhm.
for the retail investor. I mean,
Right.
you're sitting on $20 million and you want to have a certain portion of your wealth in international. Absolutely. I mean, there are wealth managers who will advise you. It's just that the quality of advice required with the right
Mm.
amount of research
Mm.
requires you to have a certain amount of wealth to be taking that exposure.
Mhm.
If you've got say a 2 crore portfolio, which is average, investing 10 lakhs, I don't know if it's worth all the tax and the hassle unless the convenience of accessing those asset classes which are well researched and
Mhm.
is not yet there, and I'm hoping over
Okay.
the next 3 to 5 years those asset classes become more easily tradable and more easily available as
Mm.
investment choices for our investors, and we're watching the space. So I'm not taking a yes or no at this point in time, Rajiv.
Mm. Mhm.
I just don't know enough. I've not done my research. But yeah, I think as the economy opens up, as Gift City becomes more stable, as you get asset managers who are able to offer these asset classes as real choices rather than
Mhm.
speculation, then I think they will increasingly become part of client portfolios over the next 3 to 5 years.
Great. So I think we got like 3 minutes left. So I'm going to open it up to our audience in case they have questions. But uh, but let me thank you for what you have said so far in terms of very sensible things, right? You got to keep looking at your portfolio based on your own longevity, your personal goals, etc., and divide it up into multiple classes. You said three buckets, right? The short-term bucket, the medium-term bucket, and the long-term bucket, and ensure that at the end of it, your objectives are met, barring catastrophic problems like catastrophic illness or stock market crashes, something which are acts of God, which you can't really do that much about. But this issue of the secular decline of the dollar is something that interests me because that kind of changes a lot of things that we've taken as given for granted for a long time, right? So, what the gift city is able to do in terms of giving us a little bit more visibility and possibility of investing abroad is also helpful. But I agree with you that, and I'm personally doing this myself. I'm putting more of my eggs into the Indian basket because I'm seeing that this is sort of at the beginning of a long cycle. And I, I mean, several people have talked about long India. One is Harsh Madhusudan. Who do you know? Harsh Madhusudan? He's an
Mm.
economist. No, okay. So I've heard that he's written a couple of books about that. So I'm positive. I'm hopeful, and I hope that your listeners and your clients are also seeing India positively, which I guess is the case considering that the outflow of FII money has been more than compensated for domestic investor money over the last year or so, right? So I don't see any questions that have been asked by our audience. So I think that means we will pretty much close in a minute. Uh, I just saw Nishani coming in. Nishani, do you have a question?
I think he's part of IIT Madras itself. So.
Right, right. She is executive director of IIT Madras Alumni Association. So, Um, with that, I think we will now bring this to a close. And thank you very much for your sage comments, Atul. Very interesting, very exciting. So I can see how you really were able to spellbind your IITB audience. So as a speaker, in financial affairs, and best wishes to Scriptbox as you go forward. So thank you once again for taking the time to talk to the IITMA audience.
Thanks,
Bye.
Rajiv. Thanks.
Welcome. Thank
Thanks.
you.
Thanks, Ronnie.
Bye bye.
Cheers, guys. Bye bye. Take care.
Bye.